Big news from Wall Street this week. After days of uncertainty, Federal Reserve Chair Jerome Powell finally gave investors the signal they were waiting for. His speech at Jackson Hole sparked the biggest rally across markets in months. Stocks, Bitcoin, even gold all jumped. So what exactly did Powell say, and why did it move markets so strongly? Let's break it down. Powell hinted that the Federal Reserve may soon cut interest rates. He said the balance of risks has shifted, meaning the Fed is now more worried about slowing growth than inflation. For anyone new to this, here's why that matters. The Fed is America's central bank. When it cuts rates, borrowing becomes cheaper for companies and consumers. That extra flow of money often boosts spending, which supports stock prices. But lower rates can also add fuel to inflation, which is why markets pay so much attention to Powell's tone. The market reaction was immediate. The S&P 500 climbed 1.5%, almost reaching a record high. Small-cap stocks, which are very sensitive to changes in rates, surged nearly 4%. Treasury yields fell, the dollar weakened, and Bitcoin rallied. Gold also gained, as investors looked for safe havens and assets that perform well when money gets easier. This isn't the first time Powell's words have moved the markets. At last year's Jackson Hole conference, a single sentence about easing policy helped spark a major rally in tech stocks. And if you look back to 2019, a similar shift in Fed policy gave Wall Street a strong push upward. Investors are now hoping history repeats itself. Most traders expect a September rate cut, and some are even betting on a larger half-point move, which usually only happens during emergencies. Still, not everything is smooth sailing. Just last week, inflation data came in hotter than expected, which had pulled stocks lower for 5 straight days. The job market is showing signs of weakness, and political pressure from President Trump has created new uncertainty around the Fed's independence. Some analysts warn that if growth slows too much, corporate earnings could take a hit, and that could drag stocks back down again. So what does this mean for everyday investors? If you hold stocks, lower rates often help in the short term, but long-term risks remain. If you're holding cash, inflation may reduce its value if the Fed cuts too aggressively. And for crypto investors, Powell's comments are especially important. Bitcoin and other digital assets are considered high risk, and they usually rise when interest rates fall. That's because lower rates make traditional assets like bonds less attractive, so some investors move into crypto in search of higher returns. At the same time, a weaker dollar can push more global investors toward Bitcoin as an alternative store of value. But here's the catch. If inflation flares up again, regulators may feel pressure to tighten rules on crypto markets, which could limit the upside. So while Powell's dovish tone gave Bitcoin a short-term boost, its long-term direction will still depend on both economic data and government policy. In short, Powell's speech lit a fire under the markets. Stocks, crypto, and gold all surged, but the rally is built on expectations, not guarantees. The next few weeks of jobs and inflation reports will decide whether this surge can last. Stay tuned, and don't forget to subscribe for more daily financial updates made simple.